Hi everyone, welcome back. Hope you guys are having a great day. So this is a clip from a previously recorded video. This is a much shorter clip of it. But as always, not financial advice, for entertainment only. Do your own research. And I'm invested in closing companies. And if you enjoy this type of content, hit the like button, subscribe, helps me out tremendously. And let's get into the clip. Let's get into our final story here, which is on Bitfarms reporting the first quarter financial report. And here's the main things that we are getting from it here. So they with adjusted beta of 6 million. So that's kind of the adjusted beta is looking good because it's a 6 million profit there. Okay, so they're accelerating the 6 exahash target to September 30th from the original one they had towards the end of the year, end of Q4. Now they're saying it's going to be at end of Q3. They have mined over 21,000 Bitcoin since inception. That is a lot. And they've mined 1,287 Bitcoin in Q1 and 379 in April as well. And they post direct cost of production about 12.5 per BTC in Q1. I have them a little bit higher. I have them at 13,000 something, I think. But that's pretty close. Okay, and I don't think there's anything else here that I found that was interesting. We've talked about a lot of the stuff, the Argentina being energized and things like that, them buying some more facilities or leasing some more facilities in Canada to help them grow their operations. And let's see if there's anything else that was in here that wasn't. I mean, we've covered everything here before. I'll let you guys read this as well if you want, but we'll just get into their numbers here right now. So Bitfarms right now, based on the data that I'm getting from Microsoft Excel with their stock function, they're coming in at 187 million shares. They have actually more reported now at the end of this quarter here. We'll go look at those numbers here, but the market cap is about 214 million right now. They are at 5 exahash right now. They're supposed to be about 7.2 based on the miners that I do have. I think some of the older miners will get removed, and that will be coming down to the 6 exahash that they're targeting here by the end of Q3. And we can see here that they've been last 4 weeks, they were actually in the red. Prior to that, 8 weeks ago, if you bought them, or 12 weeks, you'd be in the green by a little bit, 4.3%, 6.8%. So not a huge improvement there over the last couple of weeks here. Now, when we look at their last 4-quarter revenue, Q2 of last year, they were at 41 million. Q3 was 33 million in revenue. Q4 was 25 million. Now Q1 is coming in at 30 million. So they are starting to go up in the uptrend, which is good to see. And then this current quarter that we're in, Q2 right now, is estimated at about 33.8 million. But depending where Bitcoin goes in value, network hash rate, all that, will have an impact on it. So we'll see where this one actually comes in. This is right now just estimated. Last 4 quarters, operating costs have been coming up here a little bit here, but not substantially. They've gone up to 18.3 million in Q4, down to 17.7 million in Q1. So that's good to see things coming down as well. And then cost to mine 1 BTC minus depreciation, we're seeing about 13.13 thousand for them for Q1. Q4 was about 12.17 thousand, so about 1,000 more on that one. Bitcoin mined quarterly has come up here to in Q3 to 1,515, and then it has been coming down ever since then. So that leads me to believe that they haven't been growing as fast as the network hash rate has been increasing. And that is the result that we are seeing right now is with those numbers coming down, they're just not keeping up with the network hash rate increases like we are seeing with some of the other miners. All right, so if the network hash rate increases by 9-10% a month, that's basically how much they need to grow each month in order to stay above it, or even with it, or above it, okay? Debt to equity, we want lower is better. So this has been coming down, which is good. It's at 0.217. Current ratio, also we want higher is better. They're at 1.691 now, so that's really good. They have about 1.69 times the current assets to pay off current liabilities. And you can see that here as well. Total current assets has come down through Q4 to 69 million. It has increased in Q1 to 73.9 million, which is good. And then total current liabilities has been coming down, which is also really good. In Q2, they were at 96 million. They're down to 43 million now in Q1, which is really good. They've been paying off a lot of their debt as it is. Okay, so let's take a look at the numbers that we do have here for Q1 compared to Q4 here. And I'll zoom this in for you guys so you can see this a little bit better. We might be able to go a little bit more. See if we can go 200% on this. I think that'll work. Okay. So here's what we got. Current assets. We'll see if we can get all. There we go. We can see all of them. Okay, current assets right now is at 29.3 million compared to Q4 of 30.8. So that's not too bad, down a little bit, but not too much. Trade receivables is down to 374,000 from 701,000. Other assets is about the same, down 200,000 or so to 4.3 from 4.5 million. Short-term prepaid is up a little bit here to 13.4 from 12.9. Tax receivables is up a little bit here, 12.3 from 12.1. Digital assets is up nicely to 10.2 from 4.6. Digital assets pledged as collateral is up a little bit here to 2.1 from 2. And then assets held for sale is 1.2 or 1.6 compared to 1.2. So total current assets has increased to 73.9 million from 69 million. So that's good, quarter over quarter wise. And then property, plant, and equipment net is 210. So that's down a little bit here from 219. Right of use assets is down a little bit to 15.4 from 16.3. Long-term deposits is also down to 31 from 38. So overall, total assets came down actually to 331 million from 343 million. But we've been seeing this consistent decline here as Bitcoin price has been coming down and assets have been coming down in value as well. Current liabilities. Trade and payables and accrued liabilities is down to 19.5 from 20.5. So that's good. Current portion of long-term debt is also down to 21 million from 43. That's excellent. And then current portion of lease liabilities is down to 2.8 from 3.6. So that's also really good there. So total current liabilities is down to 43.5 million from 67.2 million. That's good. We want a nice healthy balance sheet there. And that's looking really good. Long-term debt is down to, what is that, 67,000 from 4 million. So that's good. Lease liabilities is down to 13.5 from 14.2. Slight decrease nonetheless, but still good. And then asset retirement provision is up actually to 2.2 from 1.9. And overall total liabilities is down to 59 from 87 million. So that's good there as well. Then when we look at total liabilities and stockholder equity, we are at 331 million compared to 343 million. So that's a little bit of a decrease. So that's still not too bad there. Revenues. You can see that revenues did increase to 30 million and 50,000 compared to 25.9 million. So that is good. Those have come up. And that's based on self-mining only. They had other revenue here reported in Q4 of 1.1 million on something. Let's see here. What else do we have here? Expenses. So energy and infrastructure went actually down a little bit here to 17 million from 17.4 million. Depreciation and amortization is about the same here. Purchase of electrical components has come down to 320,000 from 507. Electrician salaries and payroll expenses is down also to 356 from 392. So that's good there. Cost of revenue is down to 38.4 million from 39.1 million. So a slight decrease, but nonetheless, it's still pretty good. Gross profit minus depreciation, we're looking at about a 43% on that one compared to 32. So that is a good increase there on that one. Operating expenses, selling, general, and administrative was down to 8.3. Love seeing that. So that's down from 11.9. Realized loss or gain on disposition of digital assets, that's actually up to 587,000 from 28 million negative. Change in unrealized gain is up a little bit here to 2.6 from 2.1. Unrealized loss and revaluation is 0, so from 19.8. Loss gain on disposition of property is only negative 1.5 from 73 million, so that's good there. And impairment on goodwill is null here. It's 0. It should be 0 at least. And that came in at 14.9 million compared to 23 million net loss on Q4. So that's good there. And then net income before tax came down to 2.8 negative million compared to 19.9. So that's good there. And net loss income was 2.4 from 20 million. So that's really good there. And you can see here that their total comprehensive income came in at 1.25 million negative compared to negative 20 million. And that resulted obviously in a negative penny loss per share, EPS, earnings per share, giving a negative one penny. So that's really good there. They were actually at positive 2 cents here in Q1 of last year. Came pretty close to that this year of being positive as well. So that's really good overall. Okay, when we look at some of the other metrics here that we do have on them, here's the number of shares for them, 240 million right now being reported. I have them at 190, what was it that I had them at? Sorry for the quick scroll here, 197. So that number is definitely off on it. Hopefully I'll get updated here in a couple of days with Microsoft. But let's see here. BTC mined, they mined a little bit less here like we talked about, obviously, in the last couple of quarters here after Q3. And cost of minus depreciation, we talked about that was 13.1 compared to 12.1. Current equity debt, current ratio, talked about that as well. And then revenue minus general and administrative compensation is at 27%. So I like seeing that number come down. That's really good. Like to see that even come down more, under 20%, if not better. But overall, they have been doing all the right things, paying down debt, growing their hash rate, doing the things. They're not growing their hash rate fast enough, though. I'd like to see that hash rate growth a little bit faster there. And based on all of those numbers here, we're looking still at, let me see if I'm using the right numbers here for it. I think I updated this, maybe not. I did update it, okay. So I only came in I was off by 1.8% as far as what the revenue is going to be for self-mining. So that's not too bad. I want to be within 2.5%. Usually that's really good here. We were really close in Q4 at it, but we're off a little bit here on that one. We'll have to try a little bit better for the next quarter. That's kind of where we came in at. And so that's the last 3 quarters of 89 million combined total for the current quarter that we're in. And the last 3 quarters is 123 million. 50% net income from gross revenue with a P of 9. We're looking at $2.81. They're $1.09 right now. They're definitely undervalued in my opinion as it is for right now. Okay, their total current assets, let me see if I got that over here. I thought I had it. Total current assets is 73 million. What's their total assets? Let's take a look at that really quick. Assets, current assets, total current assets. Total assets is 331 million. Their market value is 214 million. Definitely undervalued in my opinion. Okay, but let me know what you guys think of this.